The stock market is in a terrible state right now, but I believe Tesla and these two other stocks have amazing potential to bounce back and beat the market. Stay tuned to find out. Welcome to Trade Daily, where we break down all the best stock market news. Like and subscribe to keep up to date with the stock market, and I really hope you enjoy this video. When it comes to investing, you've probably heard the saying, buy low, sell high. And in theory, it's an easy plan to follow. However, in practice, it's much harder. Buying a stock that has increased in value month after month can feel easy, but buying a stock that's fallen in value can feel risky or even painful. Yet, that's often what you must do to buy low and sell high. With that in mind, let's look at 3 stocks worth buying on the dip. Each one has solid fundamentals but is down more than 40% this year. First on the list is Advanced Micro Devices, or simply AMD. After years of rockstar-like performance, Advanced Micro Devices finally came crashing back to earth in 2022. Shares are down 52% year-to-date as slumping PC sales have weighed on results. During the first week of October, AMD released partial third-quarter results that were significantly below its earlier guidance, delivering another blow to its stock price. However, by getting the bad news out of the way, AMD Chief Executive Officer Lisa Su set the company up for success when it released full third-quarter results on November 1st, 2022. Revenue and earnings per share both missed estimates, but only slightly. Meanwhile, AMD's non-PC segments, data center, gaming, and embedded, all delivered solid revenue in line with analyst estimates. The bottom line is this: semiconductors are everywhere and they're integral to our current economy. AMD is one of the best-run semiconductor companies in the world, and its non-PC segments continue to fire on all cylinders. For those reasons, AMD is worth buying on the dip. The second stock I want to buy on the dip right now is Airbnb. The company operates an online rental marketplace that connects hosts and guests. After enduring a pandemic caused slowdown in 2020 and 2021, Airbnb's revenue bounced back in 2022 as pent-up travel demand drove a surge in bookings. In fact, the company reported its highest ever quarterly revenue figure of $2.9 billion for the 3 months ending on September 29, 2022. Yet, Wall Street was unimpressed. Shares fell following the earnings release, presumably due to lackluster fourth-quarter revenue guidance. But it doesn't require much work to see that Airbnb's financial metrics look fantastic. Net income swelled 4% to 6% year-over-year to a quarterly record high of $1.2 billion, and free cash flow increased to $960 million. Airbnb saw close to 100 million nights and experiences booked, up 25% on a year-over-year basis. Nevertheless, Airbnb shares are down 38% year-to-date. However, I still believe in the company's business model and management. High inflation and rising interest rates might hold Airbnb back in the short term, but it's a stock worth owning in the long run. And just before we continue, we're giving away a $50 Amazon gift card every single day. You just need to subscribe to the channel, like this video, and get the bell on. Also, comment at Love Trade Daily to lock in your entry. Winners will be contacted privately. Good luck. Now let's not waste another second and get right back into the video. The final solid stock I want to buy on the dip is Tesla. Like my first 2 picks, shares of Tesla have been under pressure this year. Its stock price is down 4% to 5% year-to-date. Yet like AMD and Airbnb, there's been no deterioration in Tesla's fundamentals. In fact, the company has just reported some of the best quarterly results in its history. Revenue for the 3 months ending September 29th, 2022 was $21.5 billion. Net income was $3.3 billion, or nearly double its year-ago figure. Overall gross margins held steady at around 25%, showing that Tesla is doing a fine job navigating volatile price swings in parts and materials. What's more, management painted a rosy picture of the future. CEO Elon Musk foreshadowed a prospective stock buyback of between $5 billion and $10 billion next year, along with a vision to far exceed Apple's current market cap. Surpassing Apple's $2.2 trillion market cap would mean more than tripling Tesla's current share price, but that goal isn't unrealistic if the company can continue to grow at around 50% year-over-year. Yet, there is a concern that has weighed on many Tesla investors this year. Musk is selling shares of Tesla to help pay for his $4 billion purchase of the social media platform Twitter. Musk has sold more than $19 billion worth of Tesla shares this year to fund his purchase of the social media company. Those sales have undoubtedly put downward pressure on the stock. However, they may present an excellent opportunity for prospective investors. In the bigger picture, Tesla remains an automotive juggernaut. If the company can successfully expand into trucks and semis, investors would be smart to load up on Tesla now as broader economic conditions and Musk's stock sales hold it back. Yes, we all know Tesla stock collapsed on Wednesday. It has also crashed by 60% since its November 2011 record high. After such steep falls, do I buy? Tesla stock came very close to a 2-year low on Wednesday. After crashing by more than half over the past year, have shares in Elon Musk's carmaker fallen too far, too fast? On Thursday afternoon, before the U.S. stock market opens, Tesla stock stands at Wednesday's close of $177.59. Earlier yesterday, this hugely popular and widely traded share hit a 2-year low of $177.12 before rebounding slightly. Sadly for fans of the world's richest person and his electric car firm, this has reduced Tesla's market capitalization to $560.8 billion. This relegates the business to 6th place among U.S. mid-cap stocks, below Warren Buffett's Berkshire Hathaway. At its 52-week high, Tesla stock closed at $402.67 on the 4th of January, the very day that the U.S. S&P 500 index hit its record high. Since then, it's been pretty much all downhill for this one-time tech wonder stock. Over the past 12 months, Tesla shares have lost over half their value and are down a whopping 60% from their 4th November 2021 high. Tesla cars are sprinting up everywhere. Typically, I will see at least 4 on a short walk around my neighborhood. Indeed, the car park of my local Sainsbury's supermarket seems to be filling up with Tesla models. At the current share price, Tesla stock trades on a sky-high price-to-earnings ratio of 54.7. This translates into an earnings yield of just over 1.8% a year. Some of you might be asking, why on earth would I buy into Elon Musk's vision at this elevated level when I could buy cheap shares offering 10 times this earnings yield? Of course, the answer is that Tesla stock is priced as a go-go growth share, with investors expecting many years of earnings growth. Indeed, I expect Tesla to soar up the league of global carmakers by sales. It currently hovers around 20th place or thereabouts. Finally, I am a big skeptic of Elon Musk's decision to buy Twitter for $4 to $4 billion. To me, Musk now has his hands full turning around the social media platform, leaving less time to manage Tesla's operations. We're already seeing the chaos going on over at Twitter as Elon tries to save the sinking ship. And I can't help but wonder how this will affect Tesla's operations. He's already taken 50 of the best minds at Tesla to come and work with him at Twitter, leaving the company to fend for itself while its stock is in a dire position as it is. But smart investors will be able to look at Tesla as a company and realize that it's more than just Elon Musk making it successful. The Tesla team is made up of the best minds on the planet working to push the industry to places it's never been before. I remain very hopeful that Tesla will manage for now, and I even believe that its stock could see a historic bull run very soon. I break down all the reasons why in this video here.
And with that, we've come to the end of the video. I'd like to give a huge shout out to anyone who's made it this far. I hope you enjoyed the video. I'd also like to make it clear that this is a news and entertainment video, not investment advice. You should always do your own research and speak to a financial advisor before making any investments. Thank you all so much for your support. Don't forget to like and subscribe for the chance to win up to $20,000 in Amazon gift cards, and we'll see you in the next video. If you want more crazy trade news, how about this video we did?